Hi everybody, welcome back to our series of video lectures on the statement of cash flows. The statement of cash flows can be prepared using two different methods, the direct method or the indirect method. We'll talk more about the methods for preparing financial statements in a little while. But in the meantime, this is kind of what a statement of cash flows looks like. This is in general what it looks like, whether it's prepared on the direct or indirect method. It's going to have the three sections we talked about in this order. Cash flows from operating activities, cash flows from investing activities, cash flows from financing activities. And each one of the sections will show the individual inflows and outflows of cash and will total up the net cash provided by operating activities, for instance, or net cash used by operating activities. And the same thing will happen in each one of the sections. And then we're going to total up the net cash provided or used by each of the activities to calculate an increase or decrease in cash during the financial statement period. We will show the balance at the beginning of the period and add that to the net increase or decrease in cash for the current period, and that should calculate the year-end balance of cash. And we will compare this year-end balance of cash with the cash shown on the balance sheet to make sure that it's the same. If they are not the same, there's a good possibility that an error was made in preparing the statement of cash flows. And last, we won't actually practice in this class, but you should know that a separate schedule or footnote disclosure must be included with the statement of cash flows for any non-cash investing or financing transactions. We're actually not going to do that in this class. On pages 468 and 469 of your textbook, you will find a comprehensive example of the preparation of the statement of cash flows for UMA Company using both the direct and indirect methods. You will find it very helpful to flag page 469 because we will use the format shown on page 469 for both the direct and indirect cash flow statements for UMA Company. So let's take a close look at these two statements of cash flows. You'll notice here's the one for the direct method. And by the way, the header for a statement of cash flows does not include the words direct method, does not include the words indirect method. It is simply statement of cash flows. Your textbook illustrates it as the direct method, so as you begin to learn, you understand what method is being used. It is for a period of time, and for UMA here it is for the year ended December 31st, 2019. Notice the three sections. Statement of cash flows from operating activities, statement of cash flows from investing activities, statement of cash flows from financing activities. In UMA's situation, there was net cash provided by operating activities of $79,729. And under the indirect method, lo and behold, there's net cash provided by operating activities of the same amount of money. The deal is that under both the direct and indirect method, you calculate the same net cash provided or used by operating activities. It's just a different way of getting at the number, just a different calculation. Also, on the two methods, only the cash flows from operating activities section is different. Look at all the words here. We'll go over these words. We'll understand it much better by the time we finish this series of video lectures. But look at all the words required under the indirect method to arrive and calculate this number. If you look at the direct method, it's usually a lot fewer lines and numbers to calculate the same number. That is the only section that is different. The cash flows from investing and the cash flows from financing activities sections are absolutely identical in dollar amounts and in words and in presentation between the direct method and the indirect method. The exact same words, the exact same presentation, the exact same numbers. So using the direct method or the indirect method will only make a difference in your presentation of the cash flows from operating activities. Also notice that the net increase in cash under the indirect method was $19,125. Then look at the net increase in cash under the direct method, exactly the same. So the deal is, both methods produce the same results. Therefore, generally accepted accounting principles allow the use of either method. GAAP does not require the use of either of these methods. It allows the companies to choose which method they want to present. It looks like the direct method is easier because you only have 4 numbers as opposed to a whole bunch of numbers to calculate it under the indirect method. But I will tell you that generally speaking, the indirect method is much easier to apply. The direct method, the numbers might be fewer numbers, but they're harder to calculate. Each one of these numbers involves quite a few calculations. So in a relatively complex set of financial statements, most companies will choose to use the indirect method simply because it's easier. The direct method, however, I believe, and I believe GAAP thinks, that the direct method provides more beneficial information. Take a look at this. Under the direct method, you literally tell users of the financial statements how much cash was received from customers and how much cash was paid for inventory. In this example, how much cash was paid for operating expenses and how much cash was paid for income taxes. That's a big benefit. It's a benefit to know that. It's useful information. Look at the indirect method. You start out with net income and you make some adjustments for items that do not affect cash, and then you tell the users of the financial statement the change in your current assets and current liabilities. I think it takes a little bit more of a sophisticated user of the financial statement to get as much benefit out of this presentation as out of this presentation. Great deal of benefit. And for that reason, I think GAAP recommends the use of the direct method but does not require it. So because it is easier to calculate a statement of cash flows under the indirect method, your textbook emphasizes this method, and we will emphasize this method in the rest of our lectures. We will do one statement of cash flows under the direct method, and then we will switch over and show all the rest of our examples on the indirect method. For your information, the direct method is explained in Appendix 12B, starting on page 472 of your textbook. Well, that's all for this video. In the next video, we will prepare a simple statement of cash flows using the direct method. See you next time.